Good morning to you all on Wednesday the 27th of October. Been a while since I did a video. Markets are mostly trading sideways, so I've been a little bit lazy on that front. But it's time for an update. Now, we did have some important developments last week, as you will know from reading my reports. Big bearish engulfing candles after some really good run-ups in some of these markets versus the yen and versus the dollar. So dollar and yen reversing from some very weak points. We knew that the dollar was reversing anyway because we saw the dollar index hitting that strong resistance at 94.5. That was the exact high for the dollar index. So we weren't surprised to see the dollar turn around and go higher. And that meant, of course, that the pairs which are measured against the US dollar started to turn around. Okay, what are we looking at here? Aussie versus the US. I'm going to zoom in here just to show you the relevant part. There we go. So as I say, dollar weakened significantly. Aussie had a really good run. Then we hit this. This is a bearish engulfing candle. This happens when the market pushes to a new high. So all the bulls are happy. We're seeing a new high. This is a continuation of the trend, and that's what's supposed to happen. We're starting to hit the 500-day moving average. So there was a little bit of a warning there. The market was extremely overbought, still is actually, even though we've only traded sideways. So there was your warning that the market might top, and then you get the spike higher, and then the big crushing move to the downside, which engulfs the previous day's candle. And note that that is a big green candle. So that really was, a continuation of the bull trend. Everyone was happy. But of course, the bulls are not happy now. Anyone who's bought within that period, that day before, what day is that? Let me just check. Let me get my crosshairs. There we are. So that was the 21st of October. The big green candle on the 20th. I think that was Thursday, the 21st of October, if I remember correctly. And then we closed the day below the previous day's low. So that candle was engulfed. That indicates to me that the market has topped out. It's a strong sell signal. Now, we haven't had any follow through on the downside. That's the only thing. Usually after bearish engulfing candle, you will see another big red candle to the downside on the next day, which kind of confirms the fact that the market is going to reverse. Sometimes when the market tops out, what happens is you trade sideways, you consolidate. You never quite know what the reaction will be, but you do know that probably the market will not beat the previous high. Now, we're returning to that previous high. So this is very important. When we test the previous high, which just to remind myself, it was at 75.45, we're getting close. We've been up with 70, where have we been today? 75.35. And we approach that 500-day moving average, which is around 75.58, according to this. So all in that mid-75 area. Now, if we get another negative candle on a retest of this high, maybe another bearish engulfing candle, maybe a shooting star, something along those lines, that will indicate to me that we have a double top pattern, and that would be a very good sell signal. Let's have a look at that on the 4-hour chart. Again, 4-hour chart worth keeping an eye on because sometimes you get some early warning signals. Here's the 4-hour chart with the bearish engulfing candle. You see a spike higher. We closed below the open of that candle, engulfed the whole body of that candle. We didn't quite close below the low of the candle. That would have been super negative. But anyway, you can see we then did get some follow through to the downside, which was as expected. I bet if I put some Fibonacci levels on here, well, actually, let's just try that. Just see if that support was a fib level. Yes, it was. Look at that. 23.6% fib. So the market tumbled to the 23.6% fib support. It's bounced off it. We're now trading in a sideways pattern as we slowly move back up to retest the previous high, which, don't forget, is just below the 500-day moving average. Now, as I said, watch the 4-hour chart today for an early warning of a negative candle. Watch for the shooting star, watch for the bearish engulfing candle, and that might indicate to us that we're going to get a double top. We'll wait for the close on the daily for confirmation. If that happens, then we'll be looking for a retest of this area down here at around 75, 74.60, 74.50. A break below there would complete the double top pattern, and that's when you get your clear sell signal. But a lot of people will try to sell the previous high in anticipation of a double top, get in there early, keep a tight stop above the 200-day moving average, and then they can really capitalize on any move to the downside, and they will hope that the market breaks below 74.50, and they may even add to their short positions on a break below that level, because that's, as I said, when the confirmation comes that the double top has formed. So it's getting quite exciting because we're seeing this sort of signal in a number of different pairs, and it doesn't happen often, so it is quite an exciting time. This is the New Zealand dollar versus the US dollar, and I'm just going to tidy this chart up a little bit with some of the stuff I had on there before. So we broke higher and we were expected to actually push quite significantly higher, but the problem is the dollar hit that resistance on the dollar index, and of course the dollar turned around, which meant that the New Zealand dollar did not really capitalize from the breakout above that consolidation pattern, or even a bull flag. I could call that a bull flag. Anyway, it didn't happen. We then got this bearish engulfing candle, same as we did in the Aussie dollar. There it is. Not quite as aggressive, but certainly a bearish engulfing candle in my book. Then if we look at the 4-hour chart, we're now doing exactly the same thing. We're trying to recover. We're trying maybe to retest the previous high. Whether we get there or not, I don't know. But certainly there looks like there is pressure to the downside. Oh, look, and guess what? Again, the market has held the 23.6% fib to the downside and bounced off it. So the fib levels are working, the candles are working, and now we see if there is a double top pattern, or if we just break below 71.30 without the double top pattern. So there is pressure to the downside. The only thing I will say is the market hasn't tested the, actually I need to go to the 1-hour chart for this. Worth keeping an eye on the 1-hour chart when you're looking at these sort of developments. Right, okay, the 1-hour chart isn't actually giving us any information because the moving averages are just trading sideways. If they were starting to turn and cross over onto the downside, then I would be concerned about a negative cross giving us a sell signal. We're not getting that yet on the Aussie. We're not getting that yet on the New Zealand dollar. But keep an eye on it. You know what the negative moving averages crossovers mean. I think we've covered that before. If you don't, let me know and I can run through that on another video. Right, what do I want to look at next? On the subject of the Aussie, let's have a look at the Aussie Yen again. So I talked about dollar pairs topping out because the dollar became stronger when it hit that resistance. Look at this for a bearish engulfing candle. That's mega. So a big push to the upside, a complete collapse below the previous day's low. Admittedly, that wasn't as big a candle, but still pretty big green candle. Completely engulfed that candle. The close was way below the previous low of that candle. So that really is a very, very solid bearish engulfing candle, and does indicate that the market is extremely likely to have topped out. Let's just get into some perspective. So we didn't even manage to hold above the previous previous high for the Aussie Yen, which I'm guessing that's probably the high for the year. Yes, it was. So once we broke above there, the bulls would have been sort of euphoric. Here we go. We've broken the high for the year. We're going to go off, and they were completely caught out because, of course, we've got this bearish engulfing candle, a big bull trap, meaning that all the bulls were trapped in losing positions on that day, and indeed on the Thursday, and indeed on the Friday. Is that right? The Thursday? Anyway, 20th of October. I think the Thursday was the 21st. Anyway, it might be the Friday. Doesn't really matter. But as you can see, all those bulls would have been trapped. So these bulls are nervous now. All the longs, I should say, are nervous now. They've been hit badly as we bounce back to the previous to the previous high. And let me get this straight. These bulls, these longs, are now wondering, should I exit on this bounce? Should I get out? Is the market about to collapse? I've been lucky. I'm still long, and I've managed to ride this. I've managed to ride this bounce. So again, there is double top risk here. There is the risk that these longs who are still in there will decide to get out from sort of this area up to the previous high, which was at 86.24, leaving a double top pattern. Even if we just top out here a little bit below the previous high, that still for me counts as a double top. And again, look how the 23.6% fib on the 4-hour chart held the downside perfectly. So it's really a crucial time. These potential double top patterns, it'll be very interesting to see if they form. So again, Aussie Yen, look for that potential negative candle, the bearish engulfing candle, the shooting star, something to indicate that the sellers are back in as we bounce back towards that previous high. What else do I want to show you? CAD Yen, again, as I told you, Yen finding a recovery. Another very big bearish engulfing candle. These are not common. But this one engulfed 3 days of gains. Okay, admittedly smaller candles, but it engulfed 3 days of gains. It closed below the third day of gains. So where was this? This was the 18th of October. The low was 92.05 and the close on that day was 92.09. So just above the low, but certainly closed below the main body of that candle. So massive bearish engulfing candle in the CAD yen. On the short-term chart, on the 4-hour chart, again, we had a bearish engulfing candle here on the 4-hour chart, giving you a little bit of an early warning that we could be about to sell off significantly, and indeed we did. So again, we're going to see, is there a kind of double top form in this market? I'm just going to scrunch this one up a little bit so we can see some of the history of that trend. It's a real nice bullish trend, a huge bullish trend, but the peak of that trend could be marked by that enormous bearish engulfing candle. New Zealand dollar yen, similar picture. I don't need to go on about it. There we go. Another bearish engulfing candle. So it really is a very important time at the moment. We could be witnessing the reversal of that very strong bullish trend against the yen, the weakness of the yen, the weakness of the dollar. I always look at gold because it's a very popular market, and usually the signals in gold are very, very good. They provide some good levels, and certainly lately they have been, haven't they? We were buying down at support at 1765.62. We were selling up at resistance around 1790, 1795. The market then broke higher, and it looked like we were about to explode. And then the Fed came out and said it looks like we could be tapering early because of inflation worries. I've been talking about those inflation worries for a long time. I suggested that they would not be transitory months ago, and it seems to be the case now. Now in gold, I can't see what's going on. I really, really can't. Sometimes in markets, there are just no clear signals. We're stuck in a sideways trend. We've got no indication from the moving averages which way the next move will be. I can't see anything from the candles. I can't see anything from the pattern. And the problem is that the longer that you trade sideways, the more every level becomes something noteworthy, because the market just trades over and over again at the same levels. I could put lines all over this showing you that this is a level, this is a support level, here's a support level, here's a support level, here's a resistance level, all these spike highs and spike lows, but there's no good. You can't have levels five points apart in gold. You'd be trading every 2 seconds for a 2 or 3 point profit. That's not the way I trade. So gold and silver, I think, are markets that we now have to leave alone. We have to wait for a breakout. We have to wait for a pattern to develop, something that gives us a clue as to what will happen, while we also wait for an indication as to whether these double tops have formed in the Forex markets. So for me, it's a kind of a wait and see day today, but we should get some important signals before the end of the week. Either the markets will break above the previous highs, or they will form the double tops for a sell signal. So we really are at a crucial point. If you want to place your bets on a double top in some of those markets, then good luck to you. We'll see what happens. It is a low risk reward trade. What I mean is your stop can be just above the high that we saw last week, and as we're approaching that, obviously the risk is low. You could have a 20-30 pip stop, and then if the double top does play out and we get another bearish engulfing candle or another negative candle, the downside should be significant. We can easily be falling 50, 100, 150 pips quite quickly. Okay, I think that sums everything up for the day. We'll have a look at this again tomorrow.